Well, it was a record start for the week for the stock market. The three major indexes all finished at all-time highs today, powered by technology shares. A handful of major deals were confirmed, which helped lift the mood, and we'll have more on that in a moment. And Wall Street's view of the U.S.-China trade negotiations, which seem to change daily, well, they were optimistic today, and it all contributed to a continuation of this latest rally that began in early October. The Dow was up another 190 points. We're back above 28,000. Nasdaq was up 112. The S&P added 23. Mike Santoli takes a closer look at whether the new highs can hold.
Wall Street's record rally has slowed in recent weeks, but it has not yet stopped. While the broad S&P 500 drifted to a fresh all-time high Monday, it is up only a fraction of a percent over the past 10 days. Now, with the index ahead by nearly 25% for the year, the question turns to whether the rally has already priced in most of the expected good news on the economy and trade, or whether the market is merely pausing ahead of a typical homestretch run higher through December. The key drivers of the market's recovery since August remain in place. Rampant recession fears in late summer now appear unfounded. Global growth is showing signs of picking up. The Federal Reserve is on hold with rates at benign levels, and seasonal factors favor stocks near year end. And history shows that when the market gains at least 20% in a year, the following year is also up about 70% of the time, albeit with more modest gains. Still, some analysts are quibbling with the market action here and there. The portion of all stocks that are keeping pace with the major indexes has fallen off a bit. The economically cyclical stocks that led the way off the August market bottom have flagged somewhat. Bond yields have retreated from recent highs, causing some to question the consensus expectation for a growth acceleration soon. And stock valuations are about as high relative to corporate earnings as they've been this decade. So it's easy to make a case that stocks have already reaped the benefit of a potential U.S.-China trade deal and a return to moderate earnings growth in coming quarters. But then again, grinding higher while shadowed by worries over valuation and policy issues is exactly what strong bull markets tend to do. For Nightly Business Report, I'm Mike Santoli.